Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. This episode is for the business owner who thinks that their accountant may be a little too old school or a little too hesitant when it comes to approaching tax strategies and deductions. Many accountants and tax professionals are actually extremely conservative, and I think that doesn't really come as a surprise. However, you cannot expect your tax pro to be like the dad, like Veruca's dad in Willy Wonka, who just would accommodate every single request of his daughter. You remember this? Like the I want it now girl. And she got spoiled with everything she ever asked for just because she wants it. And that is not our job as accountants, to work for our business owners and to give them everything they want, to deduct everything because they say they can. Now, there's always a counter argument to this, that there's always this back and forth, the tug of war with your accountant where you think you can take a deduction, but they say you can't. And then your, response is, well, I'm going to go find another accountant. Before you do that, I want to kind of plant the seed using this episode to think about, well, is that the right move? And why is your tax pro saying no? Why are they saying that you can't do that? Are they giving you a reason? Are they just too conservative for you? Or is there a deeper reason that you need to be listening to? Sometimes your tax pro needs to be the voice of reason. They need to be the logical one that will question whether you want to take the risk of an aggressive position. And sometimes they're really just looking out for you. So just because they're trying to protect you doesn't mean they're not looking out for you. In fact, the opposite. It may be tempting to judge the quality of a tax pro just based on how much they're saving you, in air quotes, saving you in taxes. But you should equally consider the due care that they're putting into responding to you, how they understand your goals, how they look at your priorities, and how they challenge you when it's needed. The mark of a strong pro is their ability to explain the risks and the choices available to you to make the most educated decision for yourself. I'm seeing this a lot with tax pros right now, that they are simply telling the taxpayer, the business owner, what to do. Pay yourself this much in salary, or go do this, or don't do that. And instead of that, a kind of authoritarian approach, I think it's just way more productive to have a discussion, to actually ask more questions, to actually dive a bit deeper and say, hey, business owner, why do you want to take that strategy? Or what do you think that's going to produce for results? Have you considered the risks of doing that? Here are some of the risks I think you should keep in mind, and let them make a decision, of course. But I think that the tax pro needs to weigh all the alternatives and present facts that the taxpayer, business owner, may not know. It's very, very likely that you as a business owner don't have all the facts straight, and you're basing your desire to take certain deductions on something you heard on TikTok, or something that your colleague or your friend is doing, your peer in your industry. And you're saying, I want to do that too. Well, a lot of circumstances are different across different people. And sometimes what someone else can deduct, you can't. So it's not necessarily a blanket approach. So what you have to understand is, before you go to your tax pro and say, hey, I think that you're too conservative for me, I want you to take a step back and really understand that the level of conservative versus aggressive is only one factor. It could be showing up like that when it's really protection. It's really understanding and weighing the options and saying, you know what, I don't think that's a good move for you right now. I just don't. It can be disappointing. It can be discouraging. But I want you to understand that most of the time, in fact, I wish it was all of the time, your tax pro is just looking out for you. And your tax pro will actually say no to aggressive strategies, even when you think you can make a strong case for it. Maybe historically you've taken an aggressive position on something else, and the pro doesn't want to draw unnecessary attention to trigger an audit. Now, there's lots of reasons that a sound professional would say no to something. Okay. So when we're unpacking a tax strategy, And maybe it's a little more aggressive. And we don't expect you to know what's aggressive and what's not. I do expect you to ask questions of your preparer and say, hey, on a scale of 1 to whatever, or a scale of A to B, whatever, well, how aggressive is this? Would you take this for yourself? And ask those questions honestly. Like, would you recommend I take these different strategies? Now, here are 3 things that I want you to ask yourself. If you're looking at, let's say, a tax strategy or tax position, and it may be considered a little aggressive, you think you can get away with it, AKA you think you can defend it, but your tax pro is saying, no, I don't think we should do that. Or no, that's not a good idea. Or no, that's not right for you. Here are the things I want you to ask yourself before you judge them. Okay. Number 1, do you have enough evidence to substantiate your story? Most of the time, when I say no to a strategy, or when one of my clients says, I want to take this type of strategy, I say, well, you don't have all the documentation to support that. Or, hey, we're not going to go back and create this 3 years ago and create this documentation for you. We don't have it. So we need to look at it going here and forward. So do you have evidence to substantiate the story you're telling? Do we have the right documentation? Now, this is something we help all of our clients with, and we make sure we have in place if you're a client of ours. And your pro should be doing this as well. So if you're worried and going, I don't think I have any documentation for that, talk to your pro, find out what is a good piece of documentation to support your strategy, and if you can make that available. Number 2, is it over 50%? So is it 51% likely or more that you could convince a skeptical and independent IRS agent that this is a valid deduction? So can you be persuasive enough and make a case? Now, this comes down to how savvy are you at explaining yourself? How do you present yourself? Are you able to sit in front of an IRS agent and professionally explain, this is why I've chosen to take this position? If you're not in a place where you can do that confidently, then I generally err on the side of being conservative. Because if you don't want to pay for representation and you want to represent yourself, but you're not the best person to, present and represent yourself because you can't explain the deductions, then I say, hey, we may want to ease up on the aggressive strategies, because if we call too much attention to ourselves here, we trigger an audit, and then we have to show up and we have to present a case. So a lot of the times what ends up happening is we say no to certain strategies because we go, it ain't worth it. It's just not worth the couple of bucks you're going to save in order to do that. And this is kind of like a little 2.5, right? Is it worth it in terms of dollar value? Is it going to make a difference? Is it going to move the needle? If it's not, if you're going to take an aggressive position, but it's only going to save you $10 in taxes, and it's going to increase the likelihood drastically that you're going to get picked for an audit, I'd say that ain't worth it. So you have to weigh, like, how much am I really going to save with this? And is it worth it to me to expose myself to risk? Number 3, are you taking other aggressive positions where one could form an impression of you as pushing boundaries? And what I mean by that is, if an IRS agent saw your return and you were taking several aggressive positions, I understand, especially if you're taking one, it's like, well, I thought I could take that, and here's my explanation, and here's what I'm thinking. Makes way more sense. But then they see another aggressive position and another one and another one. And eventually they go, I think you're just trying to push the boundaries. I think you're just trying to push the limits of what you can get away with. And I think that there's intention here to inflate your deductions or to deflate your income. And they can add suspicion to that. So I look at it as, there's a couple of things that you can be more aggressive on that maybe you're better at defending. But in general and overall, I would say you're better off just looking at your whole story, your whole situation, and saying, am I going to be leaving an impression that I'm trying to, scam the IRS? Am I leaving the impression that I'm not claiming enough of my income? Like, what is the impression I am leaving behind on my tax return based on how they would read it as an objective third party? And that's not an easy question to answer, by the way. I think that you have to really work with your tax professional to ask these types of questions and say, hey, can you just look over my tax return? And I do this all the time, guys. I look over the tax return and I say, if I were going into my audit brain, because I was an auditor for over 10 years, not in the IRS, but I understand an audit program and I understand what stands out. So I look at the return and I go, this number is going to stand out like a sore thumb, and they're going to ask questions about that. In fact, it may get picked up in their AI or whatever they use to scan, and it will probably get picked up for an audit at some point. And that's an interesting approach to it, or an interesting thought, is to go, okay, well, if it's likely we think that I'll get picked up for an audit, A, is it worth the dollar value? B, do I have enough documentation? C, are there other aggressive positions where this could be contributing to an overall impression of me? And D, is it more likely than not that I could defend it? You have to weigh all of these different things. And you have to understand that when your tax professional says, no, I don't think we should take that, ideally, they are thinking of those different types of things. They're thinking about it's not worth it, or they're thinking about, well, we don't want to trigger an audit, or they're thinking about, other positions that you're taking, or their confidence in your ability to defend it on your own if they can't represent you. So think about that. Keep that in mind, because before you judge your tax pro as being too conservative or too old school, just understand that they are generally looking out for you, kind of like a parent, and that you should be careful about challenging them too much where you're trying to take really aggressive positions and fighting them on it. You do take responsibility for your tax return at the end of the day, but you want to make sure that you're also helping the professional that you're working with protect their license and make sure they are enjoying working with you as well. So I would say definitely cooperate with your pro, make sure that you are in a good position to take these strategies. And I'm not saying don't take them. I'm just saying weigh the options and understand that they are coming from a place of love usually. And before you discount your tax pro and say, well, they're not saving me enough in taxes and they're not doing enough for me. They could be. They very well could be. A lot of the time people come to me and say they want a more aggressive pro. And I look at their stuff and I go, hey, I think they made a good decision. I like that they didn't take this, or I like that they did take this. I think this story makes total sense and I support this. So a lot of the times I actually look at tax returns and I say, yeah, I like how they're doing it, even though it is a little more conservative, but there's a lot of choices that go into that. If you are struggling this tax season, trying to find a tax pro that can speak to you, that can understand you, consider our year-round tax strategy service. We don't just do tax preparation services. We do year-round tax strategy and tax compliance monitoring. The whole goal of that is to make sure we're taking the surprise out of that surprise tax bill. So if you're interested in learning more, go ahead to fitfinancialsolutions.com, click on services, and explore what we have to offer. Hey there, are you looking for more tax and accounting help for your small business, but tired of the confusing jargon or feeling judged for your questions? This is exactly why we created a completely free Keep What You Earn community centered around this podcast. This community is a space to ask questions, hop on our monthly connection calls, and explore more information about our episodes and our guests. Click on the link in the show notes to join us in this month's call to chat with me and our other guest experts. See you there. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.